On today's edition of the Startup Central, we're going to be covering all angles when it comes to the crypto meltdown. There's a lot to talk about, whether you have investments and actual skin in the game, to the Web3 phenomenon and how investors and founders were all looking at Web3 as the next big thing. What does the crypto meltdown mean for all of this? All angles covered with Parth, who's joining us from CoinSwitch Kuber, and Raj from WazirX. Thanks, gentlemen, for being with us here today on Startup Central. The fact is, whichever way you look at it, the crypto meltdown has been coming and it's been a long, painful one. You're looking at almost 12 consecutive weeks now for the Bitcoin selling off. It's hit a 52-week low. It's fallen below $25,000 a pop, and there are experts now who are saying it could even fall to $20,000. Ethereum is also being punished, as are, of course, many other coins. The first question, Parth, from me to you is, for CoinSwitch, has this meant a drop in volumes? Has it meant less trading activity?
First of all, thank you for having me on the show. And I think that volumes in general, people are being a little wary in terms of if this is the right time to enter the market. And nobody wants to catch a falling knife, basically. But it's worth noting that, as you mentioned, BTC is having 12 consecutive weeks of price drawdowns. The share of BTC as market cap dominance, that has kept on increasing. So we are witnessing a phase where there's a flight towards quality crypto, and people are moving away from so-called altcoins and getting back into Bitcoin and Ethereum. So this painful stretch is going to probably continue, and investors who are trying to look at a long-term horizon can use this opportunity to enter the markets probably.
Okay, Raj, coming to you. What kind of a drop in volumes have you folks seen at WazirX? It's been now 12 consecutive weeks nearly of this crypto meltdown.
Thanks for having me. Actually, this has been the season of bad news, actually. The markets have been weak since the start of the new year. Indices all over the world are very, very weak. The inflation numbers are high, which has led to interest rates going up, leading to a fall in indices across the world. So even the BSE and the NSE have fallen. So, the BSE is down by about 1,500 points and the NSE is down by about 430 points. So it's unfair to actually just single out crypto, as the poster boy of a fall. Netflix is down by 70%. So that's how bad companies are. It's been painful for investors across the world, across different sectors. You can't look at this just in isolation is my way of looking at it. Now in India, we are in a unique position because three things have affected us badly. One is the new budget, the budget and the new tax laws that have come into place. Frankly, we are not very upset about the 30% tax on gains. What is affecting all the exchanges is the 1% TDS, which we are sure will affect volumes, and it has already affected volumes to an extent. The second most important thing that is happening is the fiat on-ramp problems that exchanges are facing, because banks are refusing to give us banking connections. So which is why volumes have anyway dwindled. Coupled with this global meltdown, it's going to be a long, hard grind for most exchanges and for investors.
Now, both of you have spoken like politicians, so let me get down to it. Parth, what kind of drip in trading volumes? How bad is it? I'm trying to get a sense of it.
So again, I can't give you the exact numbers, but in general, investors have been wary of trying to dip their toes in such markets, and but I have to agree with what Raj said, that you cannot look at the crypto markets in isolation. This is systemic macro instability which is playing out across asset classes, be it equities, and specifically you have to look at US growth tech stocks. So the correlation between Bitcoin prices and Nasdaq was at all-time highs. And last Friday, when Nasdaq closed down by almost 4% down, it was expected that the weekend with low liquidity is going to spill over into a downturn in prices in crypto. That's exactly how it's played out. So investor volumes will be on the little shaky grounds for now. But again, like I keep on saying it again and again, if you have a long-term view, this could be the right time, to start entering the market.
Okay, we don't do advisories when it comes to crypto investments, but what I would like to also understand from you, Raj, is, and if no one wants to hold a falling knife, going beyond Ethereum, Bitcoin, maybe even a Solana, Cardano, etc., is a rub-off also being seen in the rest of the ecosystem? For example, NFTs. WazirX has been, does have a platform for NFTs. Is that down as well?
Yeah, transactions are down by close to 60 to 70% in terms of volumes. So WazirX last financial year, we did volumes to the tune of $45 billion. It's going to be a very, very tough year ahead for us. We are already down by about 60 to 70%. And with the new TDS rules kicking in from the 1st of July, we are very, very worried. And similarly with NFTs, there is this perception that the tax rules will affect the NFT platform as well. So the mood is rather somber at our offices at this point of time.
So I just want to be clear, 60 to 70% drop in volumes for WazirX is for Raj, for the NFTs, for the coins, Bitcoin, Ethereum. Overall, you're saying overall volumes?
Overall, in terms of the exchange, yes, we are down by about 60 to 70%.
Parth, I understand you don't want to talk numbers, but is it similar for CoinSwitch?
Again, like those would be like very broad estimates for now. But I would want to highlight that after the TDS law comes in, we might see more clarity in terms of where the volumes finally stabilize. But in terms of the 30% tax, we definitely saw like some dip in volumes, but it's not been as drastic as mentioned.
Fair point. Now, Parth, let's take this forward. This was an ecosystem that was also being built, and of course, one, you'll have the trading, make money as an asset class, but a lot of innovation, Web3, that's supposed to happen on the back of cryptos, right? Blockchains, cryptos, all of that. So my question to you, Parth, is what is CoinSwitch take on all of this and what it could mean for Web3? You folks are building an ecosystem as well. Are you talking to founders and employees of Web3 startups?
So, as with like all bear markets, this is the best time to build, and that's what a lot of like these founders are doing right now. And Web3 in general is going to disrupt not just financial services, but a lot of other industries as well. We have seen, at least in the last week itself, MasterCard, Visa, all these big players announcing ease of buying NFTs on different marketplaces. So in terms of traditional finance supporting the growth of the Web3 ecosystem, that interest is still pretty high. And again, as I mentioned, that this is the time to build. So we will keep on seeing quality projects come out of this churn of the markets and survive the next bull run.
Raj, let me take your views on this as well. I remember in so many last months, every press release of any new fund that was going in for a new closing always included that phrase Web3. Maybe the best time to build, but what do you see happening to the larger ecosystem?
I broadly agree with Parth, but also we have to remember, Nayantara, that history doesn't repeat itself, it rhymes. So we could look at, Web3 as, the earlier version of Web1. So I don't know if you were around, you're rather young, but in 2000 you had this massive crash in the internet. This was the early internet at that time. Amazon was, in serious trouble. People expected it to go bankrupt. There was a dot-com bust that happened. Shopping.com went under. Whole plethora of big, giantly funded firms went under. But look at where we are at this point of time. Then you had in 2008 a similar crash, when banks the world over just went under. But what happened again? You had the Twitters, the Facebooks of the world, a whole new bunch of companies just coming, setting up shop and just taking the path to innovation the way forward. That's what's going to happen here. So what we are affected by is the price of tokens, right? But builders are not usually affected by that. A token is is bought and sold on an exchange, but the real building of the plumbing is actually happening as we speak, so that doesn't stop. So I suspect that this year will be painful for a lot of investors, but again, this sector is so interesting. It's like the internet of the late 90s all over again. You have the world in your hand and you can do whatever you want to do with it.
Okay. Now, Parth, I want to take on something that you said, which is that while, of course, Bitcoin, Ethereum might be in vogue, what you're seeing is more traction for good coins. Tell us more about that. What does that mean? What are you seeing traction for on the exchange?
So this is something that you have seen in previous cycles as well. So whenever we have like a bear phase, there is always a flight for quality crypto. So a lot of people who've invested in the asset class want to move away from altcoins to the more established networks. And why I say established is Bitcoin has been around for more than a decade. The network has been running. There was a ban on mining by China, which took away like 35% of the mining hash rate, but still the network continues to churn along at that speed of one block every 10 minutes or so. So in terms of that, the resilience that the Bitcoin network offers, we see a flight towards such kind of networks. Versus altcoins are fairly new. Even Ethereum is like time tested. It's been around for more than like 6 years now. Whereas like some of these new coins, probably the names that I can take are Solana. They were recently launched. They've only seen this particular cycle of boom, and now they're going through the bear phase. So probably like other Ethereum competitors, they are called layer ones as well. They are also witnessing a similar churn. Avalanche, be it Polkadot, be it Cardano. So we are in that phase where there is going to be a risk off sentiment where you're not really just chasing crazy returns, but you're actually looking at what the developers are building on these platforms, and try to invest on more fundamentals of these blockchains.
And Raj, are you folks seeing something similar on WazirX?
It's just the same thing all over again. When there is, when there are times are interesting, as the Chinese say, things don't happen, when everything is nice and hunky-dory, right? So that saying goes, may you live in interesting times. This is interesting times. And what happens is that money goes towards safe harbor. Or safer assets. And Bitcoin and Ethereum, as Parth mentioned, have been battle tested. Bitcoin as a network has been around for so long, has never been hacked. And so has Ethereum, in the sense that it's been around for a long time. A lot of protocols are building around Ethereum. So these are the two time-tested protocols that or platforms that a lot of investors will move to. The real believers and the hodlers. And it's actually when the markets go up, the altcoins rise up the fastest, and when markets go down, they fall the fastest. So it's but natural that the dominance of Bitcoin will increase at the expense of altcoins, so and shitcoins. So one shouldn't forget that, because they are a unique category by themselves in altcoins, where people are going to get stuck holding the shit coins like Shiba Inu and the works. So it's going to be very, very interesting how it all pans out. But yes, Bitcoin and Ethereum will be standing firm.
And interesting analogy probably that you can draw is like it's going to be like a crypto Samudra Manthan, where basically a churning of the markets will separate the good from the evil. And that's what we saw in the last cycle as well, where almost like I would say 4% of top 100 coins survived that cycle and are there in the top 100 in this particular cycle.
And I just like to add on what Parth said here. This is the first a bear cycle where Indians, are glued on. Large number of Indians are actually, watching their screens with avid interest. But this has happened over the last 10 years multiple times with Bitcoin. Bitcoin has lost over 50% of its value multiple times, and it's always regained new highs. So it's been there. Bitcoin has been there and done that. So it's going nowhere. Let me assure you.
Okay, so let's see how this pans out. We're all in uncharted territory. We may all want to believe we have a crystal ball in front of us, but we don't. What we have, though, seen is 12 consecutive weeks of a crypto meltdown, now resulting in a Bitcoin falling to a 52-week low, falling below $25,000 a pop as well. Thanks, guys, for being live with us today on Startup Central.
Thank you so much.
Thank you for having us.